Review show on Thursday, the 5th of February 2026. Today's episode previews the impending Bank of England and European Central Bank interest rate decisions that come later today. In the case of the Bank of England decision, the announcement is scheduled for midday GMT, with the accompanying press conference 30 minutes later. And for the ECB, it's to be announced at 13:15 GMT, 14:15 Central European Time, with the presser set for 13:45 GMT, 14:45 CET. To help me break down expectations for both central banks, I'll be joined by our Europe editor, Eric Culp, and regular guest, the market expert, Beat Nussbaumer, founder and CEO of MacroBeat. He's an FX macro trader, researcher, and FX tutor, and has been a market professional for nearly 40 years. I'll bring both my guests in shortly, but before that, just a quick disclaimer. The content provided on this channel is for informational and educational purposes only. We're not licensed financial advisors, and none of the information shared should be considered as financial investment or trading advice. Please conduct your own research, consider your financial objectives, and consult a qualified financial professional before making any investment decisions. Investing and trading in financial markets carries risks, and past performance is not indicative of future results. We are not responsible for any losses or gains that may result from following the content on this channel. With that, I'd like to bring in my two guests then. Good morning, Beat. How are you doing?
Hi, good morning, Harry. Thanks for having me. All fine this side, and hope same with you there.
Yeah, very well, thank you. And Eric, how are you doing?
Good. Hey there. I hope you're doing well. It's nice here with a little bit of snow in Frankfurt.
A bit of snow. Well, at least it's seasonal. Here we're just, as usual, in the UK, it's wet. Let's just leave it at that. Wet and cold. So the best of both worlds. Anyway, we're recording this on Thursday morning, 10 o'clock GMT. So a couple of hours for the Bank of England interest rate decision. We'll go with that first, because it's the first up chronologically, and then we'll look at the ECB. So for the Bank of England then, we're looking for, obviously, meeting of the new year and expecting interest rates to be kept unchanged at 3.75%. As soon as my graphic can update, which is not doing. There we are. It will come up. There we are. You're going to do it? Yes, we are. There we go. So we got an article on the LiveSquawk website there. Bank of England policy decisions seen on hold, messaging and projections in focus. It really is more about the messaging. As we know, the rates are expected to be kept unchanged. And the latest Economist poll expects the policy committee to vote by, I think, well, the contentious part of this is very tight between a 7-2 and a 6-3 voting pattern. In terms of expectations for unchanged on the day. It was a tight one before Christmas when they cut rates, but as is with the Bank of England, it's a very fluid situation, and we're looking for maybe 2, possibly 3 dissenters on the board. The two general, I think Taylor and Dingra have been the general dissenters, looking at a more dovish outlook and looking for cuts, but they may well be joined by Ramsden in that respect as well. So just in terms of early signals as to the tone, it's probably not. It'd be probably good to look for what the voting pattern is. You got Morgan Stanley expects 3 dissenters, the ones I've mentioned. The bank said uncertainty around the meeting's policy lean remains wide. Our view is that the updated forecast and limited near-term pricing of cuts will push Governor Andrew Bailey towards more Labour market-focused messaging, says analyst. We'll also get a monetary policy report with today's meeting, which gives a summary of economic projections over a 3-year horizon as well. So with that in mind, I want to turn the tables really, and Eric, you can maybe quiz both Beat and myself about expectations really around today's interest rates. But I want to bring in Beat first. From the trading perspective, what are you looking for from today? How will you react, or how will you hope to, face on today's decision, seeing as we're not expecting very much to happen.
Yeah, to be honest, truth be told, if you would have had this call 24 hours earlier, we would have probably had a different discussion. I think we have just gone from a political dollar in the last few weeks to a political sterling. Sterling is under severe pressure this morning on all the events from yesterday in PMQs and this whole Mendelssohn drama and the political survival of Starmer or the non-survival. So,
well, let's talk about it just before. So let's get into that. But for those who don't live in the UK or haven't really understood what's going on, it's all coming back, and it's everything.
Or live under a rock.
All things come back to Jeffrey Epstein and Mandelson, who's been a long-time Labour politician, is he's steeped in Labour and his family. To be fair, his grandfather was prominent, I think, in the Labour Party as well. He's been caught up in this scandal with Jeffrey Epstein and has been found out to have allegedly lied. Well, no, lied. The Prime Minister said it, so we can say it. He was lied to the Prime Minister about his connections to the convicted paedophile and Jeffrey Epstein, and also has been accused of leaking very sensitive information to Epstein, who is a financier and would have potentially used that information in an onerous way. So that's now all come down on the government. Within the government, there are divisions now because about the level of opaqueness around what they can reveal, what they can't reveal about his appointment, and so forth. So yeah, that's the background to what we're talking about now. For those who don't know, and sorry, B, I didn't want to cut across you, but I wanted.
Yeah, no, that's fine. That's fine. Yeah. So basically, since
yeah.
Sorry.
So how was you were going back to how that affected the market?
Yeah. So to be honest, I think it's really the case that Starmer had to acknowledge that he knew about the relationship between Mendelssohn and Epstein, and so people just feel, even despite warnings, probably also from the security side of the government, that was ignored in the process of making Mendelssohn the ambassador to the US. So yeah, this is now all coming home to roost. The Starmer has been on the weak side already for quite some time, and this could just be the sort of final nail. Now, that usually would settle the score, but given who is lining up behind Starmer, it's like, be careful what you wish for, because what's coming behind might be far worse. It seems that Angela Rayner is really from the far left of the party, and she is making a bid to succeed Starmer. So things in the UK could turn substantially worse because we are already on a fiscal worry watch. So coming back to today's meeting with the Bank of England, that to me has become almost irrelevant. The only thing we can argue is if we get a 6-3, that actually would tell us, given that sterling is already soft, that would just give us even more reason to add to maybe short sterling position. A 7-2 will just be ignored because whatever. So the spotlight is really on politics, and the difficulty, I think we discussed that on one of our previous chats we had, is that the entire market is suddenly gravitating more on a political, at least in the FX space, to a political trading environment where we have the Trump/dollar issue. Now we have the UK government/sterling issue, and that is just not going to go away. So the whole macro side has played a really smaller role than usual, I would say. So for today's Bank of England, as I said, 6-3 would just give me even more reason to sell sterling, but I actually don't need a reason. I already have plenty,
Oh, that's pretty harsh.
Well, if you've listened to any other recordings over the past few months, you'll know that Beat's been one of those very vociferous on his views about the UK political scene.
Yeah, right.
In its reflections of markets, I think.
Yeah. So if political issues are at the forefront, do you think they're going to ignore the macro stuff today when they're talking?
To be honest, it would have to be something rather really offside that is coming out that would shock the market. I think the focus is really on or let's say the market is so overwhelmed with the ever-changing landscape out there right now, which is really all happening more on the political side than on the macro side. So I personally feel there's almost nothing that could be said today on the hawkish side or on the side that would make sterling rally. There's just absolutely no chance. I would say on the flip side, the market would use any excuse where they would start to lean a little bit more dovish, or look through the inflation pop or whatever. So whenever it's dovish is probably the one thing that the market will jump on. The hawkish side will be ignored. That's just the way I look at it as well. That's my feeling at the moment.
Yeah, fair enough. Right now, it looks like Bitcoin's getting slaughtered, or it took a big hit, or has been taking big hits. People going back to normal fiat currencies, is that also something that could be supporting the start?
Yeah, to be honest, I think my feeling there is, I mean, as all the listeners will know, I'm not the biggest fan of crypto, and I'm actually amused to say that in the last several weeks, the pump messages on X are just incredible, and these people are just getting probably nervous because they're all pointing out these charts from silver versus Bitcoin, gold versus Bitcoin, and it's about going to go crazy. Now, I think what we entered in a world is hard assets, as we've seen with gold and silver and other commodities. Yeah, we have to look through the rocky road of the last few days and volatility in precious metals. That really comes down to, at some point you do have a brief bubble and you get the shakeout and blah, blah, blah. But on the essences, we see definitely hard assets. In terms of fiat, it's a very difficult question to answer because there's certain that the market is focusing on currency by currency. So we see currencies like the Swiss franc doing very well, even though it's a very small currency, a very small economy. That where there is no debt problems or no whatever else problems, those currencies seem to be wanted. Swedish krona starts to pop up. The issue is these are all far too small markets to be able to take up the slack from what people talk about reducing US investments. We got the Almundi story yesterday, a 2 trillion fund that starts talking about cutting further US investment. So there is a very funny world out there in which Bitcoin should do well. The reason it's not doing well should really be a concern for everyone that is in crypto. Again, this is not market advice or anything, as Harry did point out, but the price action in Bitcoin is a problem. And then we have to actually lead this to the next problem. We have some companies out there, as we know, with Mr. Saylor, that actually have built up a multi-billion-dollar whatever setup all centered around Bitcoin. And I'm just not sure where the pain threshold is. Feels a bit like LTCM 2.0 in the making. So there are areas which I'm not an expert to, how many people on the institutional side are involved in the crypto space that could have knock-on effects into these kind of execution trades on other assets. But it's something I definitely keep an eye on. So I'm not a crypto trader, but I watch Bitcoin every day just to understand the dynamics of shifts, what's going out there. So I think we have commodities which are obviously sought after, and we have like this sort of funny world of buying the least evil, which right now seems to be the euro. Suddenly sterling is obviously just fallen out of favor in the last 24 hours. So people try to find a space that has less problems. So we're seeking currencies that are not great, but the smaller evil.
Right. Disclosure, I do have a little bit of Bitcoin, and I did look at the chart today to think whether or not I was going to sell it, but I'm going to hold for a while. Harry,
I want to make an argument. Sorry, just quickly on the Bitcoin story. I'll make an argument. It's an emerging asset. So in that sense, it's relative to the other sort of traditional asset classes, it's a newborn. And so I think the volatility you get as people bring this into their portfolios or whatever is a little bit natural in one sense. So I'd argue that some of this volatility we're seeing here is because it's a newbie, and that's what you get with a new asset class. Again, yes, I understand everyone sort of piled it. It's all this AI stuff. Everyone piles into it and then realizes they have to be a little bit more picky, a little bit more sort of They have to finesse it a little bit more and understand it maybe a little bit more in the nature of it. And I think people are in that space a little bit with Bitcoin at the moment. Yes, there are those people on one side who just think this is it's an overinflated electronic whatever. But I mean, there's obviously value in it. People have done a lot of studies in it, and there's value in it because people think there's value in it. So I think just to counter a little bit with what's being said by B, that's my view. I'll try and keep an open mind with it. I was skeptical at the start, but I'm trying to keep an open mind and say, well, this is it's a newbie. It hasn't found that.
If I may add just a word to what you just said, Harry, which is absolutely 100% correct what you said. The only thing that we see right now, or has been going on for weeks, is less the volatility issue, but the actual one directional issue, which is down. And I think what Bitcoin definitely is, and what probably many people did underestimate, as the institutional sector grew in this space, we do not do, how do they call it, hodl, right? So institutional traders have to risk manage. How do they risk manage? The only thing they know is risk on, risk off. So Bitcoin is a risk asset on steroids, that when you have sort of risk on or whereas in the world where actually it should go up, it actually goes down, which actually just shows the reverse price action of a safe haven. And that is really my point here. It's less about, yes, volatility, fine, we can argue gold and silver had a lot more of that than Bitcoin in the last 72 hours. But I think it's when you observe the market of what it should do versus what it's doing, I think that is where my sort of point is, that is it really just a risky asset where people just punt around them as we have JGBs? And to be honest, just one last thing again on this maybe. If you were to overlay probably JGBs versus Bitcoin, I read a lot about when Bitcoin was near the upper end still, that some of the whales that held Bitcoins for like 10, 11 years started to sell out. So I'm just not sure if this topic we quickly touched up on one of our last chats about the end of cheap money actually did also find its way into some people cutting out on Bitcoin. But that's just the broader picture. Who knows? That's just the sort of story I came up with to explain the current price action a little bit.
Right. I mean, I think it's still relatively new, so new assets often get overbought as long as it just doesn't go too crazy, which it may have. I think we'll find out. But back to the BOE. Yeah, I get that sterling is at the forefront right now, but you know, the officials, they have to think about other stuff too. Harry, what do you think they're looking at within the economy?
Well, part of it, I think, is what we've seen from analysts is that we've got inflation, and there's a piece from ING which I'll put up on the feed later on that suggests that inflation could see a big pop lower over the next month, 2 months, simply because it's there's some base effects at play as well. But just they could see a disinflationary effect coming through, and I think also the labour market, and in that respect as well, I think there'll be a bit more focus on the labour market and where that's at the moment in terms of judgment for the central bank, because inflation, as I said, it's been moving around. But everything in terms of we're going to get updated projections today, and we're not looking for too much change, which suggests that everyone's got a fairly decent handle on where the economy is at the moment, and it's moribund. There's low to no growth in the UK economy. That's expected to maybe pick up slightly in the near term, but ultimately over the 3-year horizon, I don't think we're looking particularly spectacular. I've got a piece here from, I think Barclays have got the labour market. Yeah, so they say the labour market is front and centre of the current policy debate. Recent data suggests that we are on track for it to ease by more than the MPC expected at the time of its November monetary policy report forecast. The unemployment rate is, on our read, set to surprise to the upside in Q4 by 0.1 of a percentage point, having already overshot by 0.1 of a percentage point in Q3 at 5.1%. And they say wage growth is on course to be 3.4% 3-month year-on-year in December, undershooting the MPC's forecast for the 4th consecutive quarter. So just that to simply encapsulate your question, labour is really the focal point for the MPC today.
And in general, right, the last cut, inflation wasn't low, and they cut anyways.
Yes, exactly. And I do think that was more to do with maybe what they're seeing down the road with this disinflationary picture, but also with the wage pressures, as I said, continuing to ease in the near term, which gives them that room or that reasoning for the cut. But it was a close call. It was a 5-4 split. So, you know, not all the committees is overstating. Not the whole committee is committed to this and believe that's the right path to be on. And again, I don't see it. I see it being contentious down the line for a number of members in that committee. Right, we've done a lot on the Bank of England and so forth. I want to move on to the ECB, which is also coming up today. And as I said, will also probably provide very little in the way of interest rate decision itself. So Eurozone inflation has fallen below the ECB target. Rates on hold all year, and you put a question mark on that. This is Eric's piece, also on the LiveSquawk website. So please go and have a read of that. Eric, what are your initial layout expectations around today's ECB decision?
Yeah, I think everybody's just waiting to see if Lagarde will go off script at the press conference, which she hasn't been doing much of lately. I think this is going to be more of the same. There's been concern about the dollar versus the euro. The dollar's weakness, it's changed a little bit. I mean, it's gone back to the 117 mark, went back under 118 overnight. So, I mean, it's still high, but it's not 120, which it was, you know, last month. I think the pressure's off a little bit on central bankers in the Eurozone in general. One, growth was better than expected last quarter. You know, they surprised the upside again, which for Europe is, you know, they should probably have a parade about that. And inflation, you know, it's even the core rate. The core rate's what, the lowest since in 4 years. And I think the outlook is for even more disinflation. So, I mean, talk about a good place. You know, it's cold here. It's a little wet, snowy. They can just snuggle up and sit it out.
Okay, it was if that's what they want to do. Well, in Frankfurt, I've been there on a cold day, and it's yeah, I get it. Pete, your perception and expectation around today's decision.
Yeah, to be honest, I think you just mentioned, I think my focus would have been or is on any comments on foreign exchange. FX is back. It has become a topic between US and Japan. We've seen more officials in Europe start to mention the currency, some bothered, some less bothered. I'm just looking at my macro chart because I needed to remind myself where we had the last time a sort of line in the sand, not in terms of intervention, but in terms of jawboning. And that was back in 2018, I think, around when we approached 125. So that's why it's interesting we now on a 117 handle, even though a high 117 handle. It would have been more interesting going to the ECB on a 120 handle to see how bothered or non-bothered the ECB is with what was just said about the low print on the inflation side and more disinflation to come. There has to be a bother at some point about the exchange rate, whether they do or do nothing about it. Fact is, and I remember that from my time when I was in the ECB contact group meeting and sitting with these people a few times a year, that FX at the end of the day is part of monetary policy. And so I'm not saying there'd be any intervention at all if euro would go up another 500 points, but we can start to, or we will start to see comments the higher we go above 120. I would say as of 122, we would really see stronger comments. That may or may not lead to the idea of further policy easing. That's probably nothing for today's meeting, but that's just what I see looking through the year, because if the dollar remains a problem, which it could well be, and the euro is taking much of the slack because that's the only other large market for investors to go to, that you suddenly are in this situation where Europe really has to kind of try to make sure that the euro doesn't get too strong. and maybe there's where the flexibility on rates will come from, that they start to turn dovish and threaten with rate cuts if the euro is continue to go higher. But again, it's not for today, but I want to see if there's any reference to it, any comments to it, and when they comment on it, what is the comment, just to try to sense, are we just in yellow territory? Are we amber, which probably would be if we're above 120? And suddenly we're in a similar situation to the traffic light system that we're currently watching in Japan with the MOF and, as we heard, the Federal Reserve story. So the meeting itself, I think, I don't take much away from the interest rate outlook, whether it's dovish, hawkish. I don't think, if they're clever, they just stay middle of the road. So my focus is really more on what they say the sort of problems are, one of which would be FX, I think.
Yeah, I think you're largely right here, or completely right. The question is, what's going to happen next? Growth is supposed to get better. The Germans are dumping hundreds of billions of euros into the economy. When that comes through, we're still kind of waiting for it. I think that's one reason business confidence in Germany was flat in January. That said, it feels like growth is coming. So they may not need to cut anymore. But like you said, growth is going to also be dependent on exports, especially for countries like Germany. Then you have the Mercosur agreement. You have the India free trade agreement. When are these going to come through? When are we going to start seeing shipments to countries other than the United States, which is a major trading partner with Europe? There's a lot of moving parts right now. It depends on the bank that you look at. Some banks suggest the next move, if there will be one, will probably be another cut sometime this year. The majority say there's not going to be any move this year, and then a few say, well, if there's going to be another move, it's going to be a hike. So we're at I wouldn't say almost at equilibrium right now. I think it could go either way.
Well,
if I could add, I'm 100%. To be honest, if you tell me it could be a cut or left unchanged or a hike, I think everything is on the table, depending how this whole story out there, all this shifting place is going to continue. As what I notice is almost daily, or at least every so often, Chancellor Merz really makes comments about the deterioration of the Atlantic relationship. So, of course, nobody can decouple from the US the same way that the world couldn't decouple from China very quickly, or not at all. But there seems to be Europe seems to have been, I think Greenland made people wake up in Europe. I think there are.
I think his speech at Davos.
That's
really what did it. Yeah.
So obviously this is what led to what we discussed last time: the dollar sell America, at least in the FX space so far. But what we see is like what you just indicated. Europe is now faster than usual on these trade deals. I think they realize they have to start opening up other markets rather quickly. And the fallout from the US and what it turns into, nobody knows. But I think 2026 is about a lot of moving parts, week for week for week. And that is what I meant earlier when I said, if you think about the start of 2026, that has seen a lot of upside US data surprise, really. And the market just didn't care, at least not, in my world, in the FX space. What I indicated at the start of our chat was now sterling turning political. So there's a lot of. So I wonder if 2026 is a lot about politics and big shifts, and macro just takes a little bit second row. All the planning will come back, but there's a lot of that going on, I think.
Yeah, sorry to interrupt. The scary thing for me is it's only February, and it's early February, and all the news events we've had up until now is like enough for 3 years.
Yes, I would agree with that, and I think this is what I think, Harry, we spoke about last time about my channel approach. So my channel approach that I changed, yes, I have some core views which are easy, like the sterling one, but in general, I've become more short-term trading, because there's just no point trying to have a very big view and dig yourself into a view on something, because like you just said, Eric, we get stuff that usually happens over years, not weeks. And the market, you can tell, is completely overwhelmed with all that's coming in everything you have to assess. And some of the stuff is contradictory. One story means up, one story means down. What do you do? Probably nothing. So there is really a lot of that going on. I totally agree.
Well, we nearly got through a whole episode without mentioning the US President Trump, but nearly.
You want me?
But how much time do we have?
Yeah. Just a quick note here from the ING, who said, obviously, and they've echoed everything you guys have said about President Lagarde is likely to be pressed on the euro and the reaction function to euro strength. It's not just the euro dollar that has been strong. The ECB's nominal trade weighted euro is at a multi-decade high, and more importantly, appreciating at about 7 or 8% year-over-year rate. So there are issues with the strength of the euro, and if that continues for the eurozone economy. Carsten Bresky also mentions this, and it says how the ECB might react to a strong euro. Says comments from Lagarde such as that the ECB is monitoring exchange rates closely, or any mention of downside risks to inflation have increased would hit but not bury euro dollar sub 117.70 today, could open up to the figure, says the ING report, and the ING reports from Chris Turner. So I guess as we wrap up this episode, then for the Bank of England, we are focused on what they have to say, an update on the labour market and where they see that, because that could precursor where the bank goes, or the committee goes with rates for the rest of the year. We are still looking for a gradual easing policy from the Bank of England. Any change to that narrative is going to be important to try and assess. And then on the ECB, really, with everything else going on in the world at the moment on the political side, and rightly so, it's been a more political start to the year than macro. The euro and what happens to the euro in this scenario, and how that will affect policy, which is expected to stay fairly unchanged, or likely unchanged for a predominant part of the year at least. So on that note, just to sum it up, just to give you a quick reminder, Bank of England is at midday on Thursday, today, the 5th, and then the press conference 30 minutes afterwards. This is all GMT. And then for the European Central Bank, they will announce a decision at 13:15 GMT, 14:15 CET, Central European Time, with a press conference, again, half an hour later, at 13:45 GMT, 14:45 CET. So listen in on LiveSquawk for those decisions and see what you make of them. But I'd like to thank my two guests. Beat, thank you very much for your words.
Thanks very much for having me. As always, a real pleasure to be part of it.
No, always insightful to get you on, because your depth of knowledge in the markets is second to none. And Eric, again, someone who's covered the ECB and European news for many, many years, and is our European editor. Thank you very much for your participation.
Yeah, good to be here. I always learn something.
Yes, which is the point. I'd like to thank our listeners. If you've missed the start of this, you can go back on the social media platforms, the YouTubes, the X, and the Blue Sky, and pick it up and listen from the start. Or you can go to the podcast channels like Apple or Spotify, namely those two and others, to pick this up as well. But thank you all for listening, and we'll see you again probably tomorrow for the weekly wrap. Thank you very much for listening, and goodbye.